Palantir recently fell to $80 following a tech sector correction. The big question now is whether this marks the end of Palantir's upward trend and a good time to sell, or if this dip is a good opportunity to buy. I mentioned in my previous video that there was every possibility Palantir could drop to the $85 level. Why is that? Because stocks tend to pull back and fill gaps, and Palantir is a perfect example of that. We saw a massive 23% gap up on the recent earnings report that took it through the key $100 level. From there, Palantir climbed another 20% to set a record high just over $125 before the reversal came in. In my last video, I covered the pullback to the $100 level and mentioned two potential scenarios. First, that the pullback to $100 was actually a good sign, as this was very natural behavior for a stock after first breaking through a major psychological level. We could then see a bounce or a base at this level, which would be the catalyst for the next leg of the upward trend towards $200. And second, that the challenge with Palantir was that gap created on earnings, meaning that if Palantir dropped through $100, it would likely drop all the way back to $85 to fill the gap. And it's the second scenario that has come to fruition, very much in line with the tech sector in general, with big tech taking a hit in recent days. So what's the play going forward? How do we react to this as investors? Let's first look at what has caused Palantir to drop by 32% from its all-time high, which has resulted in a drop in market cap to just under $200 billion, making it now the 69th most valuable company in the world at the time of this recording. Let's start with CEO Alex Karp's announced plans to sell up to 10 million shares, potentially worth over $1 billion. This announcement naturally raised concerns among investors about the company's future prospects and leadership confidence. When the CEO starts selling, investors naturally get nervous. Is there something he knows that we don't? Reports also indicate that the US Department of Defense is considering potential budget cuts. Given that government contracts, particularly from the defense sector, constitute a significant portion of Palantir's revenue, this development has raised serious concerns about the future earnings potential. Then there is the broader market volatility in AI and tech sectors. A significant sell-off in technology and AI-related stocks has also impacted Palantir. Notably, even Nvidia stock fell over 7% despite strong earnings, leading to declines across other AI and tech stocks, including Palantir. Now, the $80 to $85 level is a critical support zone. From here, we could see the next move, either to the upside, back to $100 and beyond, but we could even see a break below and further weakness towards $70 and even $50, where the daily 200 simple moving average is located. At the time of recording this, Palantir was actually showing strength from the $80 level with a bounce of around 6%, which is promising, but certainly not conclusive. What could build on this 6% bullish momentum as support and push Palantir back to $100 and even onto new all-time highs? For one, the expansion of commercial contracts. By diversifying beyond government contracts, Palantir's commercial sector has shown robust growth, with US commercial revenue increasing by an impressive 64% in the last quarter. Continued expansion in this area could enhance revenue streams and boost investor confidence significantly. Strategic partnerships and product innovation also play a key role, such as the collaboration of Elon Musk's AI chatbot Grok into Palantir's AI platform demonstrate the company's commitment to enhancing its product offerings. Such innovations can attract a broader client base and open up new revenue streams. We're also seeing some positive analyst outlooks. Despite recent stock volatility, some analysts remain optimistic, raising price targets for Palantir from $95 to $115, citing better than expected growth potential. Such endorsements can influence investor sentiment positively. Personally, I ignore these opinions as they tend to chop and change like the wind. The charts tell us everything we need to know. And let's not forget the growing market demand for AI solutions. As industries increasingly adopt AI-driven technologies, Palantir's advanced platforms position it well to capitalize on this trend. Meeting the growing demand for AI solutions can significantly impact the company's financial performance and stock valuation. A broader upward reversal in this technology sector will also serve as a catalyst for Palantir to regain the $100 mark and potentially reach new all-time highs in 2025. Renewed optimism in tech often boosts investor confidence, leading to increased capital inflows. As a prominent player in the artificial intelligence and data analytics space, Palantir stands to attract heightened interest in such an environment. But let's also look at the flip side. What challenges could potentially drive Palantir stock down towards $50 in 2025? The obvious place to start would be those serious valuation concerns. Despite recent declines, Palantir stock remains highly overvalued to some, prompting analysts and investors to believe that these elevated valuations may not be sustainable, especially if growth projections are not met. Again, something I think the stock price is better off dictating rather than an opinion. We have seen with other tech stocks how they can continue pushing up despite us regularly hearing the opposite on our often misleading media channels. Then there are the government contract dependencies I mentioned earlier. The potential defense budget cuts could have a significant impact on Palantir's bottom line if they materialize. And how about those insider stock sales that tend to get everyone's knickers in a twist, particularly CEO Karp's planned share sale? It may signal a lack of confidence in the company's future prospects to investors, leading to negative sentiment and further stock sell-offs. But then again, it could just be the CEO doing some housekeeping and portfolio rebalancing, which he is perfectly entitled to do. Market volatility and competition remain significant factors. Palantir faces increasing competition not only from tech giants like Microsoft and Google, but also from specialized AI software firms such as Snowflake and C3.ai. This competition could impact Palantir's market share and profitability over time. Considering these factors, some analysts have expressed caution regarding Palantir's stock performance. I have seen analysts projecting a potential 31% downside from current levels, which other forecasts suggest the stock could be priced as low as $77 in 2025. Again, is there a chance of these reports being wrong? Absolutely. You can see how challenging this becomes when one analyst is projecting $115 and another $77, and hence why I keep saying the best indicator is the stock price itself. I recommend totally removing these analyst projections from your analysis and let the stock price dictate where it is heading next. So how do you do that? Well, here's a pro tip. If it breaks through $80, it will likely move to $70. If it breaks through $90, it will likely move to $100. Round numbers are proven levels that a stock moves towards once directional momentum kicks in. So we know the key drivers that could either propel Palantir back up to new all-time highs or see it drop further to that $50 mark. The main challenge to add to this is that what we're seeing Palantir do now is all very new. We're witnessing price behavior never seen before as it is trading at correcting at levels never done before, making it a very challenging stock to navigate. Some investors and traders will very likely have already exited their positions with this recent decline. That's perfectly understandable given the volatility. However, many others will be holding on, hoping for a swift reversal back to $100. And I need to emphasize this. Hope is not a strategy. Never has been, never will be. For now, if you're choosing to hold on to Palantir, all you can do is wait for Palantir to show its hand and then react accordingly. If it continues to drop, then you'll need to consider executing your exit strategy at some point. If the stock reverses and moves back up, I'd want to see it reach record highs before adding more to my portfolio. Identifying the strong stocks takes skill, but there's a simple way to spot high-performing stocks like Palantir quickly, just by looking at their charts for only a few seconds. Watch this video where I explain how to do it and how this approach helps me achieve an average return of 30% a year. You'll love it.